You've seen the headlines, right? The EV slowdown is here. But what if the entire market has been looking at the wrong map? Today, we're going to dig into Albemarle, a key player in the lithium space, and uncover a story that, honestly, turns everything you think you know on its head. Okay, first things first, let's just acknowledge the damage. Albemarle's stock, look at this. It's been on an absolutely brutal ride. It's plunged from a peak of $335 all the way down to $50. That is a staggering collapse. And on the surface, the reason seems pretty obvious. So the story you've heard, the one everyone's been told, is that this is all because Western automakers, your GMs, your VWs, are getting cold feet. They're hitting the brakes on their big EV plans, saying demand is weak, and they're shifting back to gas and hybrid cars where the money is. But, and this is the critical question we're asking today, what if that whole narrative, that whole Western-focused story, is missing the biggest piece of the puzzle? What if the real story, the one that actually matters for a company like Albemarle, isn't being written in Detroit or Germany at all, but somewhere else entirely?
Okay, to really get what's going on here, you have to understand that the global EV landscape isn't one big thing. It's really a tale of two completely different markets.
So on one hand, you've got the story we all know in the West. The hype is fading, plans are being scaled back. But on the other hand, you have China, and over there, EV production isn't just growing, it's absolutely exploding. You've got these manufacturers who've spent decades mastering complex electronics, think smartphones, and now they're just channeling all of that know-how directly into building cars.
So let's talk numbers. Let's look at the hard data behind China's dominance, because it really shows a manufacturing engine that is just completely reshaping the entire global auto industry. And this number, well, this number pretty much says it all. We're talking about a potential cost advantage of over 10,000 euros per vehicle for Chinese EV makers compared to their Western competition. Think about that. That's not a small edge. That is a game-changing, industry-shattering disruption. So where does this massive advantage come from? Well, it's not just one thing. It's this powerful cocktail of factors. You've got lower labor costs, sure, but also huge government subsidies, super integrated supply chains, and this incredibly fierce competition inside China that's just constantly driving innovation and pushing costs down. And this dominance, it really has a face, and that face is BYD. Last year, the company shipped a jaw-dropping 4.6 million vehicles. That was enough to officially pass Tesla as the world's #1 EV maker. Just that one number tells you everything you need to know about where the real growth engine of this industry is. All right, so what does any of this have to do with Albemarle's stock getting hammered? Well, it's actually pretty simple. The key ingredient for all those EV batteries, it's lithium. And Albemarle just so happens to be one of the biggest producers of lithium on the planet. And the analysis we're looking at makes this point crystal clear. It says that if you're an investor trying to figure out the future of a company like Albemarle, the critical data you need to be watching, it's not coming from Tesla or GM anymore. It's coming directly from the production lines in China. So here's the core thesis boiled down into 3 simple steps. 1, China's EV production is just continuing to surge. 2, that surge creates this massive, undeniable demand for lithium all over the world, which leads to step 3, that rising lithium demand should, in theory, create a really powerful tailwind for Albemarle's business. Okay, so that's the theory. Makes sense, right? But the real question is Albemarle actually in a position to catch this wave? Let's dive into the company's financials and see what they tell us. If you look at their recent performance, you can see the volatility right away. They had a peak revenue of almost $10 billion in 2023, and then a sharp downturn. They ended up posting a net loss of over $1 billion in 2024. It just goes to show you how tough the environment has been. But the forecast for 2025 starts to paint a very different picture. Now, yeah, revenue and earnings, they're still under pressure. But look at that last line item, free cash flow. Now, if you're an investor, you know this is a super critical metric. It's the actual cash a company is generating. And this is where the turnaround story starts to get really interesting. So the company is actually projecting a swing to positive free cash flow somewhere between $300 and $400 million. And this isn't some accounting trick. This is the real result of them getting aggressive with cost management and boosting productivity. It's a huge signal that the business is stabilizing and getting a lot more resilient.
And for all you chart watchers out there, there's another piece to this puzzle. The stock chart itself seems to be forming what technical analysts get excited about. It's called a cup and handle pattern. And that kind of formation is typically seen as a very bullish sign for where the stock might be headed next.
So, it all leaves us with this one big question, right? While the entire financial world has been fixated on the EV slowdown in the West, maybe, just maybe, they've been using the wrong map the whole time. Perhaps the real road ahead for the entire EV industry and for the companies that supply it isn't being paved in the West at all. It's being paved in the East.